everybody. Ooh, big crowd. Nice. Sam, I'm the head of fraud solutions. I like to call it anti-fraud solutions, but I'll stick with fraud. I hope you guys are enjoying the morning. Conversations have been good, lots to think about, hey? So I'm going to spend some time taking you through a couple of things. We've been talking a lot about digital transformation, and we love to believe that it's the catalyst for financial inclusion. We're going to talk about where we are today, but I'm going to fly through this because I think we spent a lot of the morning leading to here. We'll talk a little bit of it from a payments, a consumer perspective, the payment journey. We'll look at it from a lending lens. We'll then move into identity verification, as well as the importance of identity. It starts with having a presence. So identity does that for us. And we'll then move into what are the barriers, what happens when you don't have a single source of authority, like IPRS in your country, and then how do we overcome these challenges? I think the good thing is that there's a lot of problems to solve for. The uplifting thing is that there's solutions and there's partnerships and collaboration to get us there. We'll then move into digital. So the rise of digital really solves for one challenge, and we've heard how cool it is when we get it right through M-Pesa and a whole host of other phenomenal things happening. But we've also then created another challenge, which is rising risk, rising security concerns, both for consumers like us, as well as businesses and lenders in the room, right? Formal and informal lenders. Obviously, coupled with that is consumer awareness and education, and there's a difference between the two. We'll plug a little bit into that. Plays a very important preventative role, because education and knowledge is power, right? If you know it, you are wiser. And we'll move into trends around fraud. We'll start with the global view. We'll move into developing countries. We'll look at Africa as a continent, and we'll hone into Kenya and what does that mean and what does that look like. Quite a lot to talk about. I've just got 20 minutes, so I'm going to try and rush it. So, where are we today? Today, 6.92 billion smartphone users in the world, representative of about 86% of the world's population, right? Super impressive, I think. Secondly, from an internet perspective, which is online that Sam was talking about a little earlier, it's about 85% of the world population that is actually internet users. If we look at South Africa, because it's a good comparison as a neighbor, we've got 22 million smartphone users. That only represents 1/3 of our population. Still a way to go. But bring it home, look at Kenya. 64 million smartphone users as at Q1 this year, right? It's more than your population, 117%. It's cool, right? Agree, disagree? Right. And now, interesting, 33% of internet users only. The world average? Globally, 63%. And if I just lock into one of the last slides that Sam showed, where online transactions are a little bit low, well, a lot of it has also got to do with the fact that your internet, web, online type of transaction is not as strong as your mobile users. So why is that? Because digital transformation is important, right? It allows us to connect to the rest of the world. It brings businesses closer, locally, globally, it's borderless. And it also helps us to connect to the rest of the world, right? Secondly, we also need to be sure that when we're doing this, it practically makes sense and we're able to solve for all problems, local, global, international, and it doesn't matter what color, creed, gender, it needs to be there. And why is that important? Because if you looked at Satoya's talk on M-Pesa and the fact that, in his words, we've just started, we know where we should be, and there's so much of hope, there's so much of space, and there's so much of place for all of us to actively enjoy. What did he call it? An effective ecosystem. Digital plays an important role. Financial inclusion allows us to represent ourselves in society. It allows us to have the means for services in order to uplift ourselves, in order for us to give back into our cycle. And so these stats are quite fascinating. But if you do a little bit more research, it progresses really massively in the next 3 years from now. So how do we move from that, and how do we leverage that? I think what's important is, from a lending perspective, payments, we have to be honest, on an African continent, we've got 3 front runners. We've got Kenya, yourselves, for the power of M-Pesa, right? Game changer in the fintech platform channels, and still growing. In South Africa, we've got Ozo, similar. And in Nigeria, we've got USSD technology that solves for payments. And while we've just started that journey, there's so much more to go, right? And secondly, if you look at bringing it down to yourselves back home here in Kenya, and here's a fun stat, right? So you've got the most powerful mobile payment system, fact. In 22 alone, you almost half of your transactions were made through mobile payments. 48% of your transactions, mobile payments, right? Cash was a quick follower at 30%. So liquid cash is still the currency that people are using to actually pay for any service. And cards at 15%. So that in itself tells you, from a payment perspective, you're doing great, but how do we make sure that all or most people, or actually all people, adults, have the ability to work and participate in the system? From a digital lending perspective, I think there's a bit of more work to do, and I'll tell you why, right? As lenders, whilst you love all of these cool things happening, you also have a responsibility to be risk adverse. And risk adverse doesn't mean discriminating or not allowing people to participate, right? And when you're online, be it your mobile phone, be it your app, and you're working in that, or you're applying for something, you're almost wanting it instantly. It's a fact. I've got the channel, I've got the capability, I now need a decision, and I want it now, I can't wait. And that's a huge challenge for lenders, both in the formal and the informal sector. Small and medium businesses, a little bit harder to solve for, same challenge. But the truth of the matter is, it's actually not a massive problem. I think if we look at where can we get all of these missing variables, plug it into the platform, plug it into the capability, bring in all of the data variables like bureaus offer and other institutions offer, we can actually get a really cool, seamless process and system going. And when that happens and it works well in one market, you can then scale it and build it into other markets, and you spread the love in that way. And I think that's a very important thing. I now want to spend some time on the importance of identity. Now, identity is a challenge for us, and I'll tell you why. We've got a lack of identification problem, right? And why I say that is, in Africa, there's almost 500 million Africans on our continent that lack identification. Those individuals can't even get a phone, can't participate in any type of way of life. And why does that become a lot more prevalent is, in the lower income countries, you've got 1 in 3 that has an identity, 2 don't. Massive, right? If you bring it to sub-Saharan Africa, there's 30% of adults lacking an identity. And of course, at the end of it all, the lack of identification means you can't participate to do anything. So you can't even be a part of using any service, and you're kind of a faceless individual. And that's really not cool, and it's not fair, right? So why do we have this issue? A couple of things. One, the lack of identity birth certificates or proof of life is a challenge because not many individuals, depending where they are able to do it. In some countries like ours, a lot more sophisticated, a lot more automated, but that doesn't exist everywhere. The second thing is there's the rural and urban divide. Urban areas, access is important. You can do it. It's quick, it's easy. There's also face-to-face, manual, various channels and automated channels to do it. In other urban areas, rural areas, that doesn't exist. And then, of course, there's also gender inequality. In some countries, it's okay. It's mandatory to identify a male, but not a female. And those are real problems, right? Then, then you've got the inoperability of systems. So you've got non-existence because they're expensive, they're difficult and costly, you know? And then the footprint, so you've got the building, but the footprint doesn't support it. You've got fragmented processes, manual processes, and you've got lack of digitization. So all of these things cause a problem for us. Accessibility. Like I said, barriers to entry, we're unable to link all of these things together, and that in itself creates massive problems. Now the question is, so we know all of that, what do we do about it? That's the consumer storyline. It's a sad storyline. What about businesses and lenders? You have the inability to know your customer. From a compliance perspective, it's essential. You have to know your customer in order to do business. If you can't identify the person, how are you going to do business? Right? It starts there. Secondly, you cannot provide goods and services, and that's a big population that is missing, you know, not for their own fault. And thirdly, it impacts the economy. It does not solve for financial exclusion. In fact, it amplifies financial exclusion for all of the reasons we spoke about. And lastly, it's heightened risk exposure. So back in the day, showing documents or having somebody vouch for who you are, like a community leader, was okay then, but not now. In digital, you need to validate that the individual is who they say they are through an authoritative source. Your documents are meant to be step-up authentication in the event, for whatever reason, you're not on your IPRS system, as an example. And therefore, that escalates all of the problems, and it escalates fraud risks. The proliferation of mule accounts is a problem. And there's two sides to mule accounts. One is the external fraud side, where you have syndicates that actually take advantage. They go onto innocent people, pay them a small fee, use their account for bad things, and it's all legitimate, went through the system. But then on the other hand, you do have individuals that can't get a bank account because they don't have an identification, and they're using a family member or a trusted person to do it. How do you differentiate? It's a problem. So how do we solve for these challenges? We need an identification system and infrastructure that supports and works symbiotically with each other. We need investment to establish these things. We need to bring verifiable identification processes to the unserved, and we need to provide access to these mechanisms. The second thing we need to know is once we do that, we're impacting the economy really well. Growth into capital markets, accessibility, you're able to look and function, and you're also, I think, psychologically feel good as an individual. When we look at how does all of that play back into minimized risk exposure, well, you're able to identify the person. You're able to know for a fact that this is who they say they are. Their digital assets actually links to them. Everything checks out. There's peace, there's trust, there's safety, there's security, and we can continue. Now, the next part that so we talked about digitalization and what does it mean. We talked about the lack of identification, that's a real problem for us. How does that play out, and what do we do to solve for it? And now, if we look at what does this digitalization rise for those individuals that are participating in this ecosystem does, and what are those challenges, more particularly in relation to fraud. Now, every year, TransUnion does an omni-channel fraud report, and it looks at past and previous years. And what this picture is telling us, which very similarly talks to what Satoya told us about when he was going through his presentation, what we're looking at here is the number of digital fraud attempts. So very important, digital fraud attempts across the globe in all of the markets and in all of the sectors, and a comparison between last year and this year. And why this is important, because with digital fraud comes social engineering. With social engineering comes the ability to steal a person's digital identity through smishing, phishing, or vishing. Right? Phishing is when you go onto a link, you go into a spoofed or a fake website, you give up your credentials, and before you know it, someone is interacting, pretending to be you, and you only know it later. Smishing is through SMS, phishing is voice calling. So basically, gaming, he talked about gaming, he talked about streaming, it's one of the issues that's rising. Financial services, true identity theft, rising. If you look at logistics, shipping, rising. Travel and leisure, which is a big, I think our economist spoke about travel and leisure being a big thing for Kenya, but look, it's actually starting to play out in a negative way when not done right, and when there's unsecure or unsafe channels. So this is basically a global view. If we bring it down to, there we go. Now, this is basically home to you in Kenya. So what this is telling us, from a consumer fraud survey done in your market against all of the developing markets across the globe that TransUnion has a footprint in, this is what the view of digital fraudulent attempts look like. And this is quite fascinating because you've got a challenge of phishing, right? 59%. Account takeover, it's actually a symptom of phishing. I go in, I scam you, you click on a link, you think it's legitimate, it is your bank, you put all your credentials, you give all your necessary information, and before you know it, someone else is spilling off into account takeover, they're operating on your behalf, and then identity theft. Now, if you look at what's interesting, very similar to Namibia, South Africa, Zambia. Common trend, right? If we go to the other emerging countries around the world, phishing is listed on almost everyone. It's a global problem. But what do we do about it and how do we solve for it? When we go on to, so those are basically our trends, right? So there's the risks, there's the exposure globally and what it means for you. So what do we do about it? It's basically a strategic imperative, right? I need to have secure platforms. I need to make sure that there's peace of mind. I need to make sure there's security. And in all of that, I eradicate or reduce some of the challenges we've had. And therefore, the right decisions are important. It must be made from the top. The investment must be there. And most importantly, when you're looking at business decisioning, it needs to be one of the decisions you make. You know, fraud, security, prevention, and the operability has to be a key decision maker, because if you don't, it's going to result in revenue leakage. And for Kenya, because you're so digi-savvy, your transactions are going to increase, and when they increase, and if you do nothing, your problem's going to be bigger, and I'll tell you why. This is the risk of non-investment, right? Phishing, which is voice calling and scamming you to give off personal information, is your biggest issue. 81% fell victim. So they were scammed and they followed through and there was a loss. 8% were attempted and they were smart enough to say, hey, it's not me. It's a big problem, right? Again, if we look at the rest of the Africa countries, similar. Rwanda is obviously kind of different, but there's reasons for that, and we don't have time to go into that. But again, against the world. Chile, Colombia, all of them similar. Again, a global problem. So what do we do about it? You know, it's not unique things to us. When we look at the view of safety and security in digital platforms, 63% of people surveyed said they would not return to a website if there are fraud concerns. They'd go there once, but 63% is a massive number, right? In a world where digital is increasing, you don't want that. Can you see how important it is to make the right investment at the right time? The second thing is 55% have refused or stopped opening up an account because from your mobile, which is important for you, that's your mainstream channel, because they had security concerns. And 48% abandoned their transactions. So they went online, they started, but almost half just stopped, lost revenue. So why is this? What do we do about it? Consumer awareness is important. Consumer education is important. And as a consumer, we must have the duty of care to be aware when we're transacting digitally. We must be tuned on to not take calls and give information. We must not go into links, right? We are responsible for that. That's the part we play, and education is important. Awareness, I know what I need to do. Education tells me what not to do to plug in the awareness. As a business or lenders, we must be sure that we have systems that are safe, that are trusted, that are secure, that does not create any vulnerability that actually makes the problem worse. And the last but most important thing is collaboration is key. We have to work together. When it comes to fraud, sharing is caring. It's actually a competitive advantage, because when you don't do that, you're making it so much easier for the fraudsters and the syndicates to attack you. Because why? We work in silos. We only know what we know. And the fraudsters thrive on that. Where there's vulnerability, there's exploitation. Where there's exploitation, there's risk. Where there's risk, there's brand damage, there's revenue leakage, there's a whole host of negative factors. And we need to spend time as a community, as a society, as government, as private sectors. We have to collaborate, because by not doing that, we're just going to make this problem bigger in a very evolving, fast-paced digital world. And then, final slide, key takeaways. I know I said a lot and I rushed, I'm sorry, but of everything, just to wrap up very quickly, what's important? Digital transformation is a critical enabler of financial inclusion. We cannot avoid it, we embrace it, but we embrace it smartly, intelligently, and we always look at the different role players. That ecosystem view, critical, that's the foundation. And as I said, it's a partnership, right? There's enough for everybody. We just need to be smart about it and manage and adopt the right practices. Identity verification, that's your proof of life. Imagine being there, but you can't prove who you are. It's very disheartening, right? Like, how do you motivate yourself? How do you uplift yourself? How do you grow from that? We've got a problem in Africa, and it is a problem that we are responsible in solving. Whether our countries are super advanced, it doesn't matter, but it is a challenge. And where we don't have identity verification processes, it's an absolute threat to the digital world. And you really don't want that. And then the last thing, investment in secure digital platforms and consumer awareness and education are proven mitigations in the current and emerging threats. So it's okay to look back. The statistics I shared to you look back. But what do we do with it? How do we use it to move forward? Therefore, that emergent view, that proactive view, that preventative view is done through the enablement. And collectively, all of this creates that ecosystem that allows human beings to thrive. And I think in the room, we all have the responsibility of doing that. At TransUnion, we've got really cool services. Some of them are in your books. Happy to chat at break or later on to help us collectively work together. But I think, in a nutshell, that is my story. Thank you so much for listening. Thank you.